Dear students, welcome to episode 9 of our series One Day, One Concept. Today we are going to discuss very important concept, that is classification of accounts. You might have learned this in the month of June or July, and if there are any doubts, then this episode is going to clear all the doubts. So let's start. Now accounts are basically classified into two categories. This is known as traditional method of accounting. The first class is personal accounts and the second class is impersonal account. So, related to persons and not related to persons. Simple classification is there. Regarding impersonal class, there are two more types: real accounts and nominal accounts. You might have learned personal, real, and nominal accounts in the 11th standard. Now we are going to discuss what is included in the real, personal, and nominal accounts and what are the rules for these three classes. Okay. Personal accounts. Personal accounts are divided into three categories: natural persons, all of us, then artificial persons, companies, banks, government, and representative personal. Representative personal are related to outstanding expenses, prepaid expenses, pre-received income, all this. Okay. Real accounts are related to, it is very simple. Real accounts are related to assets. Now assets, tangible assets and intangible assets. Just you have to remember, not all assets are real accounts. Mainly two accounts are excluded, which are assets but not real accounts. That we will discuss further. Then it comes nominal accounts. Nominal. Personal accounts are related to persons or all liabilities. Real accounts are related to assets. Now what is remaining? Liabilities are covered, assets are covered. What is remaining? Yes, accounts related to profit. So nominal accounts cover expenses and losses and incomes and gains. Assets are covered in real accounts. Persons or liabilities are covered in personal accounts. Expenses and incomes are covered in nominal accounts. Clear? Good. Now remember few important rules. The two effects of double entry system are known as debit and credit. Double entry system, so there are two effects, debit and credit. The two effects are linked to the three classes. Okay, classes now all we know: personal, real, and nominal. Now each class has two rules. One is debit rule, another is credit rule. Two rules and three classes. So there are 6 golden rules of accounting. So for each class, there are two rules that we are going to learn. Now let's start with the personal class. Person. Person is either a receiver or a giver. So personal class rules are: for debit, we will consider person as a receiver. And for credit, it is simple. You only tell me. Credit the giver. Remember. Okay. So debtor is receiver and creditor is giver. Clear? Now, real class. In case of real class, we are going to cover all assets. So assets either comes in or goes out. We will purchase them or we will sell them. So the two rules are, few of you might be knowing the rules. Debit rules, debit what comes in. Credit rules, credit what goes out. Assets purchase, asset account debit. Assets sold, asset account credit. And the last is nominal accounts. For nominal accounts, rules are more simple than these two. Okay. So the debit, yes, you might have just correctly. Debit all expenses and losses, and credit all incomes and gains. So for personal, debit the receiver, credit the giver. For real, debit what comes in, credit what goes out. And for nominal, the rules are here in front of you. Is this clear? Now, we are going to cover all the points in this table. Please go through the table. Personal accounts related to persons, real accounts related to assets, nominal accounts related to income and expenses. Now examples are given and rules are also given. While watching, you can pause this slide, check all the points and then go further. Okay. Now in last session, we have divided the accounts into four categories. Which were the four categories? Assets, liabilities, income and expenses. Now we are going to link all these classes to the four categories. Okay. Let's move further. Traditional approach and modern approach. Traditional approach is classification, personal, real, nominal. Modern approach is categories, assets, liabilities, income and expenses. So there are three classes and there are four categories. Now just link them to each other. Personal, yes, guess. Liabilities, correct. Assets, mostly real, few are personal. Remember two accounts. Debtors and bank are assets but personal accounts. Let me repeat. Debtors and banks are assets but personal accounts. And all income and expenses are nominal accounts. So here we have correlated traditional approach with the modern approach. I hope the classification is clear. If you have any doubts, then you can ask us in the comment section. You can go this episode once again for more clarity. So take care of your accounting. Thank you very much.